Hello everyone, this is Evan here from the Trade Risk on Friday, October 21st with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then jump into some of those popular individual names. We're going to jump right into the action today. S&P 500 closed basically flat here on Friday. On the week, it did close higher. All three of the major indices averages closed higher this week. S&P 500 finishing up 40 basis points here on the SPY ETF. Let's go back to the daily chart. Let's recap sort of what went on day to day. It was another slow and boring week, but we did manage to actually, grind higher, even though it probably doesn't feel that way. Remember, we started the week off with this gap lower and then closed near the lows. So we got follow through lower to start this week off of Friday's reversal. But that was basically it. That was as far as the bears could get us, because Tuesday we had a nice gap higher, and then we essentially closed from Tuesday to Friday within a 50-cent range each day. So while we did have some intraday movement, we essentially closed between 213.75 and 214.25 for the rest of the week. So very boring, very close ranges as far as closing prices go. And this is as we get as we kind of move through earnings season, and we've had some pretty big movers, individual companies moving throughout this earnings season, but as an aggregate net, just not a whole lot of movement overall in the indices. So where we stand right now is more of the same, more consolidation, more sideways, more indecision. Nothing has changed on that part. Notice 214, this line in the sand, this is basically what I was talking to members about all week. This is my reference point. This is essentially, where we failed each and every time this week. Trying to get above it on the upside. And remember, this is where we found support throughout the beginning and beginning of October, the end of September. Remember, the market kept having these kind of violent sell-offs into this 214 area, and that's where buyers stepped in. So price has memory here. It's a bit of a point of control. That's what I'm using in the short term to kind of dictate, who's winning this battle. As long as we're under 214, I do want to remain cautious. Now, on the positive note, the constructive side, what I do have to say is I am seeing, a bit of resiliency here in the market. Just take Friday's session, for example. We gapped down on the day below yesterday's lows, below Thursday's lows. And this market basically had everything it needed to kind of roll back over and come back down and retest these kind of sub 212 or 212 lows. But the bulls stepped in, and notice we did close on the highs. Same thing on Thursday, although it was such a much more indecisive day. It was still a fairly wide range day. We did probe lower, and again, buyers stepped in. So you're seeing some life down here below, as we get closer to that 213 level. I don't know if it's actually signs of life or just sellers just not that motivated to sell down there. But the bottom line is we're still moving sideways, right? We still are in this big messy range, the wider range, 212 to 217. That's still the playground that we're in. We may be in it. If some of these earnings haven't caused us to sort of move out of here yet, then perhaps it is just the election or, some future catalyst that we don't know about yet that is really going to kind of move us outside of this range. If we go to the weekly chart, you can see basically the same thing. We're sitting right on that 20-period EMA, and again, we're still just consolidating here. We've had very little movement in the broad indices here over the past several months, and typically, when you have that kind of contraction, tightening of ranges, you will get that expansionary move, to the up or downside, upside or downside. We're still waiting to see, which way the pendulum swings there. So that's sort of the landscape. It's basically neutral, and not a lot of exposure. The same thing that sort of we've been talking about for the past couple of weeks. Definitely have long exposure on, but certainly not willing to be in there with two feet. You just kind of 1 foot in the door. testing the waters with some different stocks that are outperforming. Let's go to some of the other averages now. IWM, Russell, you can see finished basically flat on the day, and just look at these candles all week, just a mess here, really. And again, 120, 120.50, you can see us hovering right on support. So this is a pretty important level. If we started to get a violent move below 120, you definitely would be concerned here. But so far, we are holding it. We're just treading right on it over the past week. Again, something I didn't point out with the S&P, but the 8 and 20 period EMAs here curled lower, so bearishly aligned. Again, that's just more reason to be sort of cautious here and more defensive. This is the case in all of the major averages, although the Qs, the Qs are basically turned up here, or are in the process of trying to turn up here based on Friday's close. The most constructive is this NASDAQ 100. You can see we're still close to all-time highs, really, but again, there's no energy here. We're spending a lot of time just kind of moving up, moving down, and just kind of ping-ponging back and forth. So Qs, again, this is where the leadership has been. It remains this way, but we still need to get a little more energy behind here. Perhaps the Qs is what can lead us higher eventually, but we do need to get other sectors to participate. Now, let's get into some of the other major averages. TLT, you can see, closed higher on the week, closed higher by over 1%, and it is trying to stabilize here at a pretty key inflection point. This 132 level is not arbitrary. It has been an inflection point going back for several years, really, all the way to 2015. So this is an important level to hold. Once again, the 8 and 20 are bearishly aligned, heading lower. It makes you want to be cautiously, defensive here, but you do see some signs of stabilization. That's encouraging. Let's see if next week the bulls can build off of it. If we go to the metals now, gold. Remember, we had the breakdown in the metals to start this month of October, and you can see we're still in a very kind of weak, vulnerable environment right now. We're trying to catch our breath. We're trying to put in a higher low from some of these, longer-term charts, longer-term trends in gold here throughout this year. So again, you do need to be a little cautious here, but so far the bulls are trying to stabilize around this 120 level. Silver, similar situation, still looks vulnerable, but we are moving sideways. The waterfall lower has stopped, but the breakdown from beginning of October is still in control. If we get into oil now, had a nice week, all things considered. Finished positive on the week, just barely but given the move it had over the past 2 weeks, this is a nice win by the bulls. We're putting a high level base in. That's constructive. We're above the 8, above the 20. This is something that has some momentum, positive momentum behind it. It may need more of a rest, perhaps more sideways, but this is definitely somewhere that is much more of a bullish picture here than many of these other commodities that we just looked at. Finally, if we go to UNG, another one that performed pretty poorly on the week, closed down almost 5% on the week, so not what you want to see. But again, looking at this weekly time frame, you can see still very bullish picture, all things considered. In fact, we just had a breakout 2 weeks ago of about 10% to start the month of October. We're still above the 8-period EMA, which is above the 20-period on the weekly chart for natural gas. So this is a constructive chart. This is something that we are still long, suffered a little bit of pain this week, but we're still sticking with it, mostly because it is a longer term trade, and basically looking at this weekly chart as sort of our landscape and roadmap. So natural gas, while weak this week, we still are looking for this to hopefully hold in here right around this $9 level. Closed poorly on Friday. We'll have to see if that spills into next week, and if it does and it continues lower and it fails, it fails and comes back below this kind of breakout level, then we'll gladly move on to another trade. But for now, we're going to stick with this and look at these dips as sort of opportunity here until proven otherwise, until the trend changes. That should pretty much wrap up all the major markets here. Let's get into some of the sector analysis. XLF. This has been stabilizing and actually starting to lead a bit here. Had a pretty good week. We had financials, the bulk of them already report. You can see it did close up 1.18% this week, so it had a good showing this week. This is holding up on a relative basis. XLY also doing pretty good here, particularly on Friday. And again, this is going to be influenced by some of the individual earnings, but it had a nice pop here on Friday. This has been a little bit of a vulnerable sector over the past couple of weeks, but based on today's action, if it can hold these gains and maybe even add to them, get back above $80, you could start to get a trade here back to the upside. $80.25 is a pretty important level. This is where we sort of topped out throughout May, April, June, the summertime of 2016, earlier this year. Finally, if we look at energy, continues to hold up pretty well on a relative basis. Very choppy in here, but still holding up pretty well on a grinding uptrend for the past, basically all year, right? We've basically just continued to grind higher. It hasn't been, a rip-roaring rally, but every dip has sort of kind of been picked up and pushed to new highs here on the year. So XLE continues to work. And then finally, XLB had a nice week for sure, 1.6%. A lot of these material names got a nice bid. This was certainly a weak group throughout the beginning and second week of October, but again, we saw it kind of a V-shaped here over this past week, so XLB starting to work itself higher. On the downside, healthcare is continuing to struggle here. You can see XLV just looks horrible. It's been in a downtrend since August. It's broken through support. 8 and 20 are pointing lower. This is certainly a place where, you just need to pick your spots if you're going to play around in this sector. Also lagging is still the utilities. These have been lagging. We saw a little bit of a comeback last week, but still on a relative basis, still basically in a downtrend, even though we did get that bounce. So still want to be careful in XLU. And then finally, the industrials had a bit of a comeback here on Friday. Early in the session, they were looking very weak, actually looking like they were going to start to break down below multi-month lows, but they did kind of stabilize here. Let's see if this short-term bottom can act as support going forward. If it does, maybe you have a tactical spot to sort of trade against, but you do need to be careful here in XLI. Now let's get into some of the individual names. We'll start with Facebook. Beautiful breakout here to all-time highs on Friday, 1.6% move higher. The only issue here is earnings coming up very soon is going to kind of get in the way of any trade that you may want to put on here. I would have loved to take Facebook today if it didn't have earnings coming up so soon. So this is going to be a pass for me, but it looks, perhaps this gets a nice kind of squeeze run up into earnings. That would be constructive. Tech earnings in general have been pretty good so far. Twitter will go here next. And this chart is still a mess here. It's got a series of open gaps, 3 of them over the past month or so, and they're very wide range. A lot of swings in here. This is, of course, off of all of the buyout rumors that we've seen surfacing. Interesting rip here on Friday, 7% back up to this resistance area. This chart, again, is horrible, but I just put a post out on this, is the potential for a island reversal coming into Monday. If we do get follow through off of this move higher, then perhaps, if we can gap up to, $19, which would be a big gap. So again, I'm not saying this is a likely scenario, but if we get some type of, sort of breakaway gap here, creating this little bit of island reversal, trapping this 10-day of trading range down here, then perhaps you can get a trade. Maybe that will be the fuel to get back up here, start to fill some of these previous gaps, and maybe get some traction to the upside. Again, not saying it's likely, just saying, keep an open mind. That could happen. We do have earnings coming up in Twitter. I think it's next week, so you also want to pay attention to that. I just put a post out, though. You can read a little bit more about that if you head to the site, traderisk.com. Finally, or actually not finally, but let's just move through a couple. Tesla, this one has been sort of newsline in the headlines a bit, but just still not doing much. Still just a headache of a stock. A lot of news, but the stock has been a headache. Continues to consolidate, all things considered, right? You get this downtrend line, you get this kind of uptrend here. This round 200 level is psychologically important, but really, as you get down to this 190 level, that's really where you want to see Tesla hold. If you start to break below 190, then you have to be concerned. Just going back here in the longer term range, we've mostly spent most of our time above 190, except for this brief period here to start the year off. So just keep an eye on that. It is getting pretty tight here. So if you do want to try and play for a breakout, keep that one on your watch list. Google continues to ramp higher here as well, close to all-time highs, had a breakout to all-time highs this week. Looks great. Another one that has earnings coming up, so it's like a Facebook where I'd love to kind of own this stock. We were in the stock in this kind of mess out here. We ended up just kind of throwing it away for a small loss as we kind of got chopped out. I think it was on this day here last week. But anyhow, this is not a name that we're in anymore. This is something that we'll just kind of have to wait to see how earnings play out. We've seen a lot of these tech names, again, have this kind of breakaway gap. Actually, we'll segue right into Netflix. Look at the earnings here. Look at the earnings reaction here. Now, Netflix, we talked about this very unusually sort of tight consolidation range that this was in for quite amount of time here. Basically, since the beginning of August, we traded between $95 and $100 for, since August. So for a stock like Netflix, that's very unusual to have such tight range days or weeks, let alone for that amount of time. So we had, of course, a very favorable earnings announcement that caused a 25% move this week. So just a monster move. And given the way this looks, given the way this action has been following up this report, we've continued to trade higher, closing at the highs each and every day. I would not be surprised to see all-time highs, certainly by the end of this year. But this looks like a stock that's very much in play back to the upside here that could just kind of trend and work itself higher. So definitely on my watch list to get involved in this. Can't buy it here, but something that I will be paying attention to, and I suggest you do the same. And that pretty much wraps it up. Oh, and the thought from Netflix, again, this breakaway gap. So the same type of thing, Google, if we did get some type of favorable market reaction and get this gap higher, we've seen a lot of other names respond that way this year. Microsoft just on Friday, again, we haven't seen if this is going to follow through higher yet, but we see that happening. PayPal. So we're getting these big, large gaps higher. We're getting the strong kind of follow through on that initial day. Let's see if they all kind of break away higher, or or if they come back down and fill those gaps. So that's it for today's video. Once again, if you like these videos, please do subscribe, bottom right hand corner, to the channel. As always, thank you guys for watching. Have a great weekend, and I will talk to you soon.